Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In the previous class we have solved a problem of Ramya, Divya and Kavya. Ramya, Kavya and Divya, I suppose, yes it is, Ramya, Kavya and Divya. Now let us move on to next problem. I gave it for assignment, that is Shruti, Shilpa and Shreya, right? Sixth one and seventh one also I will give it for assignment because very simple problems. There are no new things as such. Today I will give the sixth problem as an assignment problem at the end. So let me move on to the eighth problem now. Problem number 8, page number 72. Page number 72 of your question bank, problem number 8. I will read out the problem and will analyze and then we will solve it. X, Y and Z are partners sharing profits and losses in the ratio of 3:2:1. Their balance sheet as on 31st March 2018 was as follows. Liability side, if you refer, capitals are given, internal liability, no need to transfer, right? It is a capital balance in their capital accounts. Then Mrs. Y's loan account. Mrs. Y's loan account, remember, that means this is Mr. Y. X, Y and Z, they may be Mr., isn't it? Mrs. Y's loan account means that is spouse of Mr. Y. So Mrs. Y is an external to the business. She is an external to the business. I mean, it is external liability. If it is Mr. Y, then partner should not be transferred to realization account. But as Mrs. Y is not a partner of the firm, though she has a marital relation with Mr. Y, we will consider Mrs. Y as outsider to the business and hence that should be transferred to realization account along with other liabilities. We have to treat it at par with the other liabilities like creditors and bills payable, right? Then creditors, no doubt, is outside liability. Life policy fund. Life policy fund is also a specific fund. That is a fund created to meet any liability that might arise due to any happenings to the life of that is partners. So life policy fund is not an accumulated fund which is to be distributed among the partners. So it should be transferred to realization account, remember. Then investment fluctuation fund, again it is a specific fund, it is not a general fund. So hence it should not be transferred to realization account because investment fluctuation fund is a fund created to meet the liability that might arise because of the fluctuation in the prices of securities or investments. Fine. So it should not be transferred to realization account. If it is accumulated fund or general fund or any reserve which belongs to partners, that should be transferred directly to their capital accounts, but this should be transferred to realization account. Yes. Moving on to the asset side, machinery, investments, stock in trade, JLP, joint life policy, debtors, all these should be transferred to realization account. Joint life policy, it is an asset. It is an asset, like it is like an investment, right? So it should be transferred to realization account. Then what else is there? Profit and loss account is there on the asset side of the balance sheet. You know it very well that it is accumulated loss and should be transferred to the capital accounts of all the partners in their profit sharing ratio. So here profit and loss account appearing on the asset side should be transferred to the debit side of capital accounts of partners in their profit sharing ratio because it is accumulated loss. Then cash at bank is there, so all entries should be passed through bank, not cash. Let us read out the further instruction given. The firm was dissolved on the above date. JLP is surrendered for rupees 12,000. Joint life policy was surrendered means what? Realized. Very simple. We have to write on the credit side by bank, assets realized under that JLP 12,000. That's what we have to do. That's all. Machinery is realized for 55,000. Stock is realized for 15,000. Debtors realized for 6,150. So we have to write here, that is on the credit side of realization account by bank, assets realized, write one by one. Correct? Investments are taken over by Mr. X for rupees 17,500. So investments taken over by X is nothing but asset taken over by the partner. So by X's capital account, investments taken over on the credit side of realization account, right? Y agrees to discharge his wife's loan. See, Mrs. Y, her loan is external liability. It was agreed by Mr. Y to discharge. That means liability taken over by the partner. Mr. Y took over the liability. So Mr. Y's capital account is to be credited and realization account is to be debited. So on the debit side of realization account to Mr. Y's capital account, liability taken over, or Mrs. Y's loan taken over. That's what you have to do. Then it is found that an investment not recorded in the books is worth rupees 3,000. The same is taken over by one of the creditors. It's a very critical one. When here it is investment, unrecorded investment is an asset, no doubt. If it is sold, then we will record under by bank on the credit side. When we sell all the assets, along with that we will record unrecorded assets. Am I correct? Now the case is different. If that asset is taken over by a partner, will pass the entry for asset taken over by the partner, that is concerned partner's capital account debtor to realization account, right? That is what we will do. But the case is different. The asset was taken over by one of the creditors. So can you pass entry like creditors account debtor to realization account? No, you cannot. You should not. So for this, only one treatment, that is while making payment on the debit side of realization account, on the debit side of realization account, you will write what? You will write to bank account, liabilities paid of creditors. Write the creditors balance minus this amount, whichever is taken over by the creditors, and make payment of the net amount. That's all. So only one treatment for this. Clear? So that is what we have to do here. Expense of realization amounted to rupees 600. So realization expenses on the debit side to bank account, realization expenses paid, right? And bank account on the credit side, on the right hand side by bank account, by realization account, expense or realization met. That's all. That's what we have to do here. Let us solve the problem. Yes. Problem number 8. Draw the columns. Draw the columns. We'll solve the problem now. Realization account. Provide for JF column also. Debit credit is a must. Debit credit amount in particulars, JF amount in rupees. Let us start. To stock in trade. Stock in trade, isn't it? Stock in trade. How much? 17,750. Sorry, 17,550 I think. Stock in trade, yes it is 17,550. Then machinery account 40,500. Machinery account 40,500. 40,500. Then investments account 20,880. Investments account 20,880. Joint life policy account. Joint life policy account. How much it is? 14,000, right? 14,000. Then debtors. Debtors how much? 8,700, right? 8,700, yes. 8,700. That's all. No other assets to transfer. Moving on to the liabilities side, transfer all the liabilities by Mrs. A's loan account. Mrs. A's loan account. Mrs. A's loan account. Mrs. Y's loan account, right? Yes. Mrs. Y's loan account. Y's loan account, how much it is? 10,000. 10,000. Then creditors by creditors account. Creditors account 18,500. Then comes provision for bad debts 600 by PDD 600. PDD is not there. I'm sorry. PDD is not there. Not given, right? If you refer problem, there is no PDD. By life policy fund. Life policy fund. Life policy fund. How much it is? 14,000. Refer liabilities side. 14,000. Yes, it is. Then investment fluctuation fund. Investment fluctuation fund. Fluctuation fund account. How much it is? 6,000. Refer liabilities side. 6,000. Then that's all. Now let us sell the assets by bank account. By bank account, assets realized. Assets realized, how much it is? Go on entering one by one. Stock in trade 15,000. Stock in trade 15,000, inner column. Then machinery account 55,000. Machinery 55,000. Then joint life policy 12,000. Joint life policy was surrendered for rupees 12,000. Correct? So 12,000. Are there any other items to be noted? No, that's all. Write the total. How much it is? 82,000. 82,000. Then investments taken over by A, right? By A's capital account. A's capital account. Investments taken over. Investments taken over. What was the price of investment taken over? What's the value? By Mr. X, right? For rupees 17, by Mr. X it is, not A. Mr. X took over the investments, correct? Yes. So it is, the value is 17,500. Yes, it is 17,500. Then debtors taken over, right? Who took over debtors? Debtors realized for rupees 6,150. Debtors realized for rupees 6,150. So we will add here only. So let us add here. Debtors, where here? Debtors right here. 6,150. So that the total will change. 88,150 it will become. 88,150. 88,150. Am I correct? Yes. Then anything else? That's all. So debtors were sold. Debtors were realized for rupees 6,150. I added here only 88,150. We made it as, and again, investment taken over is recorded. That's by giving debit to X's capital account, right? Then what else is there? Refer the problem. Now let us move on to make payment to creditors. To liabilities, to bank account. Pass the entry, bank account. Under that, liabilities paid off. Liabilities paid off. Write one by one the liabilities. Creditors. See, creditors took over one of the assets, right? And investment not recorded in the books worth rupees 3,000. The same is taken over by one of the creditors. So while making payment to creditors now, deduct that 3,000 and write the net amount. So 18,000 creditors, how much? 18,500. Investment not recorded in the books worth rupees 3,000, right? So 18,500 minus 3,000. 18,500 minus 3,000. Deduct it and write the amount. 15,500. 15,500. Correct? Then anything else? There are no realization expenses in the problem. Are there? Yes, there are. 600 rupees realization expenses. So that should be, we have to pass entry for that. Before that, loan was taken over, isn't it? Y agrees to discharge his wife's loan. Y agrees to discharge his wife's loan, correct? So that should be, the entry should be passed for that. So to Y's capital account, Y's capital account, that is loan taken over, loan taken over. How much it was? Amount is not given, means par value 10,000, par value 10,000, right? Yes. Then realization expenses, so much 600 to bank account expenses, expenses of realization, right? How much? 600. 600. Anything else? That's all. Close it. Find out the difference. Yes. Find out the difference, see whether it's profit or loss, and share it among the partners. Yes, 1,54,150. This is the total of credit side, right? Add it, 88,150, 17,500. So 154, 150 is the total of credit side. Let us see what is the total of debit side. 58,050. 20,880. Add it together. 14,000. 14,000. 8,700. Then 15,500. 10,000. Then 600. So that is the total 127,730, right? 127,730. Find out the difference. Minus 154, 150. 26,420 is the 26,420 is the difference. Is that correct? 26,420. No, 26,400 is the difference. 26,470. 26,470. Check once. Yes, it is 26,400. Yes. Now let us distribute it among the partners. 26,400. Let us distribute. Three partners are there. Two. All partners capital account. All partners capital accounts, Under that, write X, Y and Z, right? X, Y and Z. Yes, it is. X, Y, Z, distribute it in their profit sharing ratio of 3:2:1. So 3 plus 2 plus 1, so 6. 3 by 6, 2 by 6 and 1 by 6. So 26,400 26,400 into 3 by 6. 13,200. 13,200. Then Y, how much? 26,400 into 2 by 6. 8,800. And 4,400, I think. 3:2:1 is their ratio. So 3 by 6, 2 by 6 and 1 by 6. So it will be 26,400 into 1 by 6. 4,400, yes it is. So show the calculations here. 26,400 into 3 by 2 is equal to 13,200. Like that, show the calculations and write like this. So right below that, profit on realization, balancing figure. Profit on realization, not revaluation. Remember, balancing figure. That's all. Your realization account is done. Now let us move on to the next step, that is combined capital accounts of partners, right? Yes. Let us start X, Y and Z. Combined capital accounts of partners. Yes, write X, Y, Z rupees, X rupees, Y rupees and Z rupees. Yes, here also X, Y and Z. Write debit, credit, particulars. Clear? Let us start with the balance, by balance brought down, by balance brought down. How much? Refer the problem. I think it is 30, 20 and 10. Yes, it is 30, 20 and 10. Refer the balance sheet, liabilities side. Any accumulated profits, reserves, nothing is there. If you move on to the asset side, there is a profit and loss account, accumulated loss, which should be debited to partners capital account. All partners capital account debited to profit and loss account, right? Profit and loss account. So to profit and loss account, profit and loss account. How much? Profit and loss account 1,500 should be distributed among the partners in the ratio of 3:2:1. So how will you distribute? Yes. $750, $500 and $250, right? Yes, it is. $750, 500 and 250. Accumulated loss, right here, accumulated loss, 3:2:1. What else? Nothing is there in the balance sheet. No. Refer realization account. Excess capital account debtor to realization account. So, capital account debtor to realization account. Asset taken over. Realization account within bracket. Investments taken over. Investments taken over. How much it is? 17,500 in excess capital account. Nothing in others account. Then here, isn't it? Realization account debtor to Y's capital account, that is loan taken over by Y. So, realization account debtor to Y's capital account. So, Y's capital account is credited by realization account. Realization account. Liability taken over, that is wife's loan, isn't it? Taken over. How much? 10,000. Loan taken over is 10,000. Yes, it is in wife's capital account, right? Yes. 10,000. What else? Anything else? Yes, wife's loan was taken over. It is done. Debtors taken over. Debtors are not taken over. Debtors were realized, right? Yes, debtors were realized. Anything else? No. There is profit on realization credited to all partners capital account by realization account. By realization account, profits. Profits. How much? 13,200. Then 8,800 and 4,000. 4,000. Right? Yes. That's all. Close it, find out the difference and make final payment. Leave some gap to pass the entry, isn't it? 14,000 here. Then 38,800. Here 43,200. 43,200. Then here 250 debit is there, so deduct it. 13,750. Here 14,000 total. 38,800 is the total. Deduct 500 from here. 38,300. Correct. Yes. Here 18,250 you have to deduct. 43,200. 43,200 minus 18,250. 24,950 is the difference. 24,950 is the difference. Wasn't it? Yes. Anything else? No. Make payment to bank account, right? Bank account. Final payment made. Final payment made. Final payment made, balancing figure. That's all. Now let us move on to the last part, that is bank account. Bank account. To balance brought down, write debit credit, particulars amount in rupees. It's mandatory, I must write. Balance brought down, how much it is? Balance brought down 40,500, correct? 40,500. No, 40,500 is machinery. 5,420. 5,420 is the balance brought down. That's what I was searching. Yes, then refer capital accounts and realization account and pass the entries. There is a sale of assets, assets realized, bank account to realization account. So to realization account, to realization account, assets realized right there, realized, how much it is, write the total amount 88,150. Then anything else is received? No. Then realization account debtor to bank account, liability is paid off. So bank account is credited by realization account. By realization account, liabilities paid. How much it is? Liabilities paid 15,500, right? 15,500. See, while making payment to liabilities, we didn't make payment to two items, that is life policy fund and investment fluctuation fund. That question might arise in your mind. Why payment is not made? It is a fund, friends. It is not actual liability. It is created out of profits. Though created out of profit, it's a specific liability. It's a fund, isn't it? So it should not be. It is transferred to realization account, but payment is not made just because it is a fund. It is not an amount to be payable to the outsiders, right? So payment is not made here. Then what else? One more expense is there, isn't it? Realization account to bank account expenses. So by realization account expenses, how much it is? Expenses 600, right? Yes, realization expenses amounted to rupees 600. 600. Then that's all. No other liabilities to be paid, no other incomes. Move on to capital accounts. See here, only bank account, combined capital accounts of partners, isn't it? Here two bank. So realization capital account added to bank account. So bank account is credited by X's capital account. Final payment by Y's capital account. Final payment, and Z's capital account. Final payment. Yes, write the amount 24,950. then 38,300 and 13,750. See whether it agrees or not. I doubt. I doubt it will agree. Yes, 5,420 plus 88,150. Was the total 93,670, right? 93,670. Credit side 16,100. Then 24,950. 38,300. 13,750. 93,100. What is that? 570 difference. 93,100. Isn't it? Search for the difference. Yes, students. Did you notice where the mistake is? Yes, we made a small mistake. See here, investments account. We wrote 20,800 and how much? Earlier we wrote. That should be changed as 20,830. We wrote 880. Correct? So make it as 20,830. Then other things are correct. Net profit you will get as 26,470. 26,470. Correct it. Distribute it X, Y and Z. X 13,235. 13,235. Y 8,823. 8,823 and Z 4,412. 4,412. Correct? Then here write the same profit here. 13,235, 8,823 and 4,412. Change the totals. 43,235, 43,235, 38,823, 38,823 and 14,412. Now difference, write the same total on the other side. Difference to bank, final payment made 24,985, 38,323 and 14,162. 24,985, 38,323, 14,162. Write the same final payment here. 24,985, 38,323 and 14,162. Your balance sheet, and that is a bank account agrees. Correct? 93,570 is the total. 93,570 is the total. So a small mistake. See how it affects. In board exam, if you do the same thing, then almost 4 to 5 marks will be deducted. Remember, because it affects your realization account, profit will be wrong. It affects capital account, final balance will be wrong, and your bank account will not agree. So almost 4 to 5 marks will be deducted out of 12 marks. So this is how you have to solve. Take down assignment. Take problem number 6. I already told you at the beginning, isn't it? Problem number 6, page number 71. That is a balance sheet of Disha, Diya and Deepa. Take it as your assignment problem and submit it on time. Thank you for watching this video. Thank you.